Hi, good afternoon, everyone, and thank you so much for joining us today. And we're going to give persons just a minute or two to come in. We are expecting a few of you. However, we're excited to get started, and we won't take too long to start. Okay, I think we're good to go. So, thank you again for joining us today. And before we begin, I would like to acknowledge that the land where Cooperatives First operates is on Treaty 6 territory, home of the Cree, Soto, Dene, Dakota, Lakota, Nakota, and Métis nations. We recognize that this land was not ceded and that the treaties were intended to ensure the land would be shared, sorry. Indigenous peoples have practiced cooperation on these lands for thousands of years, and it is through cooperation that communities continue to thrive today. So, wherever you're joining us from, we encourage you to take a moment to acknowledge the land where you are on and the peoples who have long called it home. So, to our regular supporters and partners, thank you so much for joining us. And for those of you who may not be familiar with Cooperatives First, we are a nonprofit based in Saskatoon, Saskatchewan, and we support groups and entrepreneurs across Western Canada to start and grow cooperatives. Our work is generously funded by Federated Cooperatives Limited and the Cooperative Retailing System, and this allows us to provide co-op education and startup support at no cost to communities. Since 2016, we have helped create more than 170 cooperatives across various sectors, including housing, childcare, agriculture, investment, to name a few. One of the themes we continue to hear from communities is the challenge of accessing capital to move local co-op projects forward, which makes today's conversation especially timely. So, we are so excited to have the team from Catalyst Community uh, here with us. And today we are exploring how communities can unlock local capital and strengthen community co op development through community finance and investment models. So, Geraldine and Joe from Catalyst Community Finance, welcome. And before we begin, we just want to gauge what do you know about community finance and community wealth building? So, just as a little icebreaker, you can drop in the chat where you're joining us from today. And I'm going to start a poll that I'm going to invite you all to just take quickly. And the question is, what do you know about community finance and community wealth building? Okay, I hope you all are seeing our poll. If you are, you can give me a thumbs up. We're gonna invite you all to participate. I hope you're seeing it. Are you seeing it, Kevin, Geraldine? Are you guys seeing the poll? Okay, we're getting some responses there. All right, so we have some great answers coming in. We just want to thank you guys for participating in the poll. Lots of people are saying that they know somewhat about community finance, in terms of the challenges that you're having. Access to capital or financing is really coming out very strong on the poll on my end, and also in terms of community investment models that you're looking at. You're looking at investment co-ops, community loan funds, and some of you are still not sure. So I think this is a great time for us to end the poll, and I'm going to hand over to Geraldine and also Joe. you should be able to see the results of the poll. So while Geraldine gets the presentation together, you guys can see some of the responses there. So thank you guys so much, Geraldine and Joe. I'll hand it over to you.
Okay. Thanks so much, Candace. I'm just realizing I thought I was sharing my screen, but I'm just sharing it with myself right now, which is not very interesting for any of you. So let me try that again. Hopefully you can see it now. And over to you, Joe, to kick us off.
Thanks, everyone. And thank you, Candace, for that introduction. Wonderful to see actually the poll that there is, some grounded knowledge already of community finance and the breadth of issues that people are interested in are very much aligned with the ways in which community finance approaches work to bring improve access to capital to communities, both place-based and identity-based. And so my name's Joe Reynolds. And it's my pleasure to meet you. And I get to work closely with Geraldine Kyle here, and you'll get to hear from Geraldine in a few minutes. And let's go to the next slide, G.
Mhm.
So today we'll introduce ourselves. We both are the co-managers of Catalyst Community Finance and have been in the field of community finance for myself, impact investing, social innovation for a number of years. We work in the field and we'll have an opportunity to talk about community finance, but we also thought community wealth building would also have some relevance to the folks on this call, and so we'll touch on some community wealth building approaches too. We'll talk about why it's needed and what their approaches are, and then we'll look to you to explore more around how it's relevant for the cooperative sector, what you're seeking, and how you're seeking to apply it. Yeah. So, as Candace started, we wanted you to reflect on and feel free to raise your hand. We want this time to be useful for you. So raise your hand or put a question in the chat, but let us know, how you see co-ops and community finance connected. That is one provocative question that we'd like you to explore as you're going through this. What does it mean for you? What kind of ideas is it bringing forward, or possibilities is it bringing forward as we talk through this? And then, what are those questions or curiosities that you have about community finance and community wealth building? We're at Catalyst Community Finance, and you'll get our website in a minute. And we're here to support communities to learn about this financing options that have been around for a very long time and continue to innovate and be developed by communities all across the country. So we can go to the next slide.
Yeah.
Yeah.
So I guess that's the thing. Well, as Joe says, our website is there, catalystcommunityfinance.ca. And we'll just leave those questions to percolate as we run through a little bit of a sort of a high level presentation on who we are and also how we see community finance circulating and its value in community. And just to situate myself, I'm on Treaty 6 territory too, as well, but on the sort of Alberta side. And I live in a small town about an hour and a half outside of Edmonton, and we're engaged in a community wealth building strategy, which puts my growing knowledge of community finance to the test in real time. So that's kind of interesting to be able to play with it both at a sort of a national level through network development and also practically in community as well. So as Joe said, I'm Geraldine, and Candace, thank you for the opportunity to be here today. And I don't need to go over what Joe said, just in terms of our work together. We've been collaborating on and off for the last 20 plus, about 20 years. So it continues, which is a joy to me. Catalyst is a network of place-based impact funds, community loan funds, impact co-ops, community land trusts, local credit unions, and other community finance organizations. And we're a collective that exists to advance the field. So this is very much part of the work that we do every day. Although Joe and I are the co-managers, what's kind of neat about the model is that it's held by a stewardship group, organizations with individuals that are really committed to seeing an advance of the field, a coordination and a growing, maturing of the field. So you see those represented with their logos there. That has been evolving over time, and it's a pleasure to be guided by them as a group. And we also have some dedicated sort of policy-facing work, which if we have time, we can sort of speak to a little bit more, but that's all held in the website localinvestment.ca if you're interested in following up there. When we talk about community finance, as we say, we sort of include a number of organization types, which these organizations may see themselves as community finance intermediaries. Certainly we do. We're not a membership-based organization so far. We're a loose network, but this is the representation of whom we see as community finance intermediaries. And it's a pretty robust community, 786 organizations across Canada. And so we're working constantly to try and connect with more across the country to tap into these 786 organizations to recognize the contribution that they're making to this field. As we just said earlier, we are working on some policy-facing work. On the left-hand side of your screen is our community finance strategy for economic renewal that we've put forward through the various budget submission processes with the federal government. For us, community finance includes practical tools for local economic growth, housing, and community resilience. It's locally rooted investment, and it's lending that delivers financial returns alongside measurable community benefits. It channels capital to projects and enterprises that are often underserved by traditional finance. And we'll get into some examples as we go along in the presentation. Community finance includes, as we say, these various types of organizations, and we'll also be drawing to the kinds of capital, we'll be drawing examples to the organizations that we know in our ecosystem contributing. Okay, Joe.
Okay, great.
You.
So why do we have community finance? Well, I think we know that in Canada we have a very robust traditional finance system that's proven itself. However, there still remains a number of gaps in how capital flows to people and places, and also entities. And so like nonprofits and charities often have a hard time getting access to the right types of capital. Newcomer Canadians or people who have challenges with accessing banking, individuals, First Nations and Indigenous peoples, Black entrepreneurs, and other racialized communities have often said that, and it's documented, that there's a lack of access to capital. Women as well. It goes on. There's a tremendous amount of challenges for even some businesses that are perceived as being higher risk, agriculture and food industry, etc. So in response to these gaps and barriers, communities have said, well, we're going to address this and to make sure that our communities have improved access to capital. And I think the cooperative investments, funds and cooperatives are the foundation of that in so many ways, and has the longest history here in Canada, mutuals and credit unions as well. but we feel like what Canada is missing are the pathways to get there. And so we're going to talk a little bit about the different types of capital gaps that exist and how community finance has emerged to address those. So we talk about small businesses and Main Street. So really micro businesses, they're often viewed as being too small or too early stage, or it's really costly to finance, or it's hard to get the types of right match to meet those needs. And similar to rural, remote, and northern communities, we often talk about um, having a patient capital. So you may be an access to a loan that you don't have to start paying off right away, but has some patience to it so that you start to pay it off once your business has established, more dependable revenue. There's many examples around that through these funds down here that continue to provide patience, or they may take more higher risk and not require collateral or loan to a nonprofit at a more affordable rate than a bank. These are all examples of how communities have used finance differently so that they can advance a social and environmental purpose. So we just here we have the Manitoba Social Finance Working Group. That's a great group right in Manitoba that includes a number of community finance organizations like the Jubilee Fund and others, and Van City Community Investment Bank. There was another one there that's obviously hasn't come through, but Thrive is on Vancouver Island. People may be familiar with the Community Loan Fund in Edmonton. I think that's the one from Edmonton. Or that could be the Ottawa Community. Oh no, it's the Ottawa Community Loan Fund. So in Eastern, it's a social enterprise fund that's in Edmonton, and then Verge is a fund that's in London, Ontario. So these are all smaller funds that lend locally or to specific to such as nonprofits or specific communities. You can change the slide there. So some of it's also we recognize that communities want to see change around affordable and maybe deeper affordable housing or other forms of community infrastructure that we've seen, like cooperative stores or farmers markets or other food distribution centers or whatever it may be. Um, and some of these are non-market providers like nonprofits, cooperatives, charities, and other social enterprises. And they can't get access to from traditional banks. Sometimes they just make it too expensive to bring in that capital. So we have funds all across the country that have begun, and we have, for instance, some people were familiar with Tapestry Community Capital and community bonds. If there's more interested in that, we can speak specifically to what a community bond is, but essentially, I hold a number of different community bonds, and I'll buy a bond for a certain amount from like say $1,000 or an up, and I get a return on that investment over every year. And combined, that investment has been able to buy buildings for community infrastructure or housing. And so it allows community members to, similar to what you do with a cooperative investment, to invest and get a return on that investment. I actually, as a community bondholder, which is different from a cooperative, I don't have a membership vote. It's just a pure investment. Um, and then we have Rise Asset Management. That's a loan fund for people who identify with addictions or mental health issues that find it really hard to get access to traditional banking. And Rise will start with a micro loan. Same with Windmill Micro Enterprises, micro loan funds for newcomer Canadians who don't have a track record. That helps uh, their track record so that when they do go to a bank or a credit union for a loan in the future, they will have had some success in paying back a loan alongside business support. Winnipeg Foundation is doing some really interesting investment structures into affordable housing. Propel Impact Fund has funds all across the country. Harvest Impact is in Guelph, and they're building a fund specifically for food access and the food enterprise along that value chain, the whole thing. So there you can see that these are really interesting funds that and solutions that have arisen from community, by community, for community need. And there are, don't, well, you'll see on that map, there's many examples that include credit unions and community futures, but ones that you may not know of, like the ones I'm mentioning here, which are all independent, all developed within their own communities. So let's see what the next slide says. So also with Indigenous entrepreneurs and community-led development, we know that Indigenous entrepreneurs face structural barriers to accessing mainstream finance. It's well documented. And that might be specifically around not having collateral or just the historical exclusion from the financial system. And so we have NACA that's been around for a long time with Indigenous financial institutions, but there's many other Indigenous funds that are led and developed. Like Entrepreneur has a new one, the CNU Fund that's just been launched this year. White Feather in Northern Ontario is really looking at how they manage their resources and financing the resource development in Northern Ontario. You'll see here there's the Raven Indigenous Outcomes Fund, and that uses an outcomes-based financing mechanism. So it's a really different type of financing to achieve shared outcomes, which would be a wonderful deep dive to get into. I'd love to talk about it more. And then, of course, the Indigenous Growth Fund. But there are many more. These are just a sampling of some of the Indigenous specific funds. And so we see community finance touching all areas of social and environmental change. We've talked about micro businesses and lack of access to capital from different groups of people, affordable housing, and community infrastructure. And here we have climate adaptation, local resilience, and I also have new Canadians, equity deserving entrepreneurs. So a huge range of funds that people can get to know and learn about. So these might be looking more at character-based lending, like Windmill, and or doing smaller investments where some funds require much higher investment thresholds. So this is really looking at how can we support small, how can we support local to grow to their next steps and achieve, a shared outcome for folks. Yeah, the Nature Investment Hub really helps. If you're interested in nature-based investing, the Nature Investment Hub is a great resource to begin to look at that. And then the Conservation Impact Bond is one that I personally have been involved with in particular. So yeah, there's opportunities to talk about any of these examples. So we're just going to pause here for a moment. We went through a lot of information, but also provided some very concrete examples all across the country. Just wondering if any of those meet your understanding of how community finance works and where you might see intersections with the co-op sector, or if there's an area there that piqued your interest that you'd like to ask more about. So we'll just pause here before we go on to the next portion of the presentation to hear from all of you on how this all resonates. And don't be shy.
Hi there. Thanks for a great presentation so far. I'm curious how you guys see yourselves or these kinds of initiatives relating to existing government-supported at-risk lender programs such as Community Futures or Futurepreneur.
Yeah.
There's a couple others province by province, but I'd like your comments on that.
We see these very much connected, like Futurepreneur, and the Community Futures, which is all across the country, and credit unions and others. They're all doing local investing. So they are doing community finance investing, and they have been for a long time. And that is a good thing. We want them to be to continue. However, even within those supported infrastructure, there are still quite some significant gaps. For instance, community futures, from what I know, maybe they have the mandate too, but there's very little, if no, investment in nonprofit organizations. And so their nonprofits and charities are systematically excluded from access to capital beyond grants and donations. And when they do access debt financing, it's usually quite expensive and difficult to get hold of. So that's one example. Other examples really look at the continued and persistent systemic barriers that different people experience, different communities of people experience. And we need to have intentional, like Black Cap Capital, which is a tech fund in Canada that specifically looks at Black founders, tech founders, to support their first investments. Really, really important to have these types of targeted investment opportunities, because really, really good ideas and huge potential are left behind still today. And we see, I mean, if that wasn't a problem, then these things wouldn't happen. These things are developed because they're meeting a gap and a barrier that's persistent. And so what we're saying is we need improvements in the current infrastructure, but we need to enable a range of capital pathways beyond just the traditional finance. I hope that helps. And I'd love to know what your thoughts are there as well.
That absolutely helps, and I appreciate the distinctions as well as the discussion of the niches of these various places. I'm curious in the nonprofits side of things. Yeah, like there are some community and development programs out there, either through Prairies Canada, but some of the community futures in particular has gotten away from over the last decade. I'm curious, could you share an example that you've seen where the investment in a nonprofit or a community initiative really provided a tangible return for investors that we could use to maybe spark some conversation?
Yeah, I think that's a great conversation. And no, there's definitely tangible return. I think returns are often below market expectations, but can be anywhere from like 2% to 8%. If you look at Community Forward Fund, it's based in Ottawa, but it's a national fund specific to nonprofits. They have returns that are, almost the same as or on par, above the average rate that a nonprofit organization needs to meet. But that's not the point, to be totally honest. We're not let's get real, because if we want to see real change happen, we can seek returns, but at some point we also need to look at what's the social and environmental outcome that's being achieved that benefits everybody. There are common benefits, and nonprofits and charities are there to do that. And I think personally, there should be a limit as to how much you want to make money off of that. But there should be concessionary returns, and they shouldn't be seen as negative. They should be seen as positive. And we need more flexibility in that financing, and that requires some creativity, to make it affordable, to make it scalable and possible. But we see a lot of foundations now segmenting a portion of their assets under management to do either direct investing into opportunities that align with their mission, or into funds like the Community Forward Fund, into the Raven Indigenous Outcomes Fund, into Verge Capital, into other things that they get a return and their money back. And so I think that is a really good practice. In Spirit Foundation, they've done their 100% impact investing now across their whole, all of their assets under management. Some of those go into public markets, but some of it go directly into community markets. And in our instance, we're speaking specifically to community investment. Yes, Randall.
Hello. I'm wondering about the realm of crowdfunding. Are there good places to raise funds for community ventures, social enterprises, and co-ops currently?
Yeah.
Yeah.
I think that, well, Go Parity is a really great platform to check out. You can list on Go Parity in Canada, and people can invest as low as $20, right through to thousands of dollars. And you can see all kinds of ways of listing on there. Now, I think everything needs to go through, I don't really know Co-Parity's threshold or application process, because I'm sure there's a certain amount of vetting before you can get onto the platform. But that's definitely a platform to check out, and we can post that in the chat as well.
Thank you.
Yeah. Geraldine, should I pass on to you now, and we can go through the community
Sure.
wealth
We can
building
go-
approach? Okay.
Absolutely, yeah. So just tying this to the broader field, if you like. There was a few hands up around community wealth building at the beginning of the conversation. So hopefully this can also resonate, certainly an area of increased interest and hopefully ongoing development here in Canada. The community wealth building, for those that might not know, is sort of a response to economic and capital flight, profits extracted by external owners, public procurement flowing to non-local firms, and so on and so forth. I feel like, we're familiar with some of the struggles that local communities experience, the sort of wealth extraction rather than ongoing community development in local areas. We see it a lot in smaller communities, particularly in examples like where I'm living in oil and gas country. And you see a lot of what was a very robust local oil and gas sector continually being bought up by larger and larger companies, fewer examples of wealth circulating locally over time. The town has recognized that they need to respond to the sort of boom and bust economy that this town was created on, as increasing demonstrations of economic insecurity grow. And so they're exploring with us a community wealth building strategy, which is very promising. And it's a response to a lot of these things where you see a lot of the times, wealth that comes in large part, maybe, in some of these big infrastructure projects, a lot of wealth coming in, but then it leaves, and the people and the companies that brought that wealth in just take it with them. And so community wealth building is really trying to get ahead of that, and we see it as sort of part of community finance is part of a community wealth building field of development, if you like. We need a sort of, in our ways of thinking, we need a new paradigm for local economic development. And I know even at SEDNet, and some of you may be familiar with the Canadian Community Economic Development Network, they too sort of recognize the shifting narrative around the opportunity for community wealth building that sees us all as part of a thriving local ecosystem, if you like. So this is just a bit of a concentration on some of the issues that can come up and the community wealth building response to that. So as I sort of said, when assets are owned externally, profits leave, decisions are made elsewhere, ownership is centralized and often not people in the local community aren't involved in those decision-making processes. Although, as we see with a lot of, say, data centers being put up, communities are absorbing the risks of a lot of these big investments, but they're not benefiting from the long-term outcomes in that regard. So as a local response to that, community wealth building would look at things like worker ownership, co-op models, obviously, community land trusts that hold the land in trust in perpetuity to ensure that any increase in land valuation doesn't increase the value of the land to a point where it becomes unaffordable for the local folks. We also see social enterprises and Indigenous ownership and business succession strategies. In a lot of communities, you see over time, even maybe mom and pop stores or locally owned businesses where the older generation are retiring, but their children may not want to buy out the business. But instead, we're maybe looking at, okay, from a community wealth building approach, do we want to buy into that business to ensure that the ownership stays locally owned and we don't lose that asset to an external company or entity. Some of the other challenges with maybe the current economic model, when capital comes in, as I said, and then exits and never returns. We're really looking at things like, with big investments in community, even big investments in housing that come in, what are some of the community benefit agreements that could be struck to ensure that maybe we look at local hiring practices, we might look at local procurement from local vendors for the development of whatever the big investment's going to be. Anything that can keep some of the wealth that's generated circulating locally. That's what we're really interested in. And also, obviously, the provision of community finance where possible to provide the sort of patient and flexible capital that Joe covered earlier in the presentation. I touched a bit on community benefit agreements. They can be hugely beneficial. Of course, there was one that Joe, I know, spoke to some time ago that put me in mind of it, which is having all sorts of trouble now. Joe, I wonder, like the Gordie Howe Bridge, as we know, is sort of being held hostage to the politics of the day, but did involve this big infrastructure project. If folks don't know, in the crossing between Windsor and Detroit, now being held hostage, but there was a substantial community benefits agreement put in place for that, which was really great. Joe, do you want to touch on that by any chance, just as an example?
Sure. Well, I definitely recommend you looking up this report. It's an excellent report on community benefit agreements from across Ontario. But the Gordie Howe Bridge was developed a $20 million CBS agreement specifically for a workforce development strategy and a neighborhood infrastructure strategy. So, and there are many examples of community benefit agreements. So that's when, like, even if a big condominium is going up in your community, or I know where I live here in Kingston, there's a number of large infrastructure projects that are taking place. If you can, maybe with help from the Community Benefits Ontario, you can structure and go into a negotiation process to try to have a community benefit agreement that comes out of that infrastructure project. So that a portion of that investment stays locally and also benefits the community. Like one in Toronto, which is around the big racetrack there, Greenwood Park, I think.
Oh, yeah.
That community benefit agreement was specifically one of the things was a community childcare center that came out of it. So it's about looking at what's happening locally, and how do we work together with a collective mindset to see what benefits can be met, and so that investment stays local as much as possible through social procurement strategies as well. And co-op businesses can have a big role in social procurement, as an example.
Yeah, I was just reminded too when I was working on a housing project in Hamilton in the last couple of years. The Hamilton Community Benefits Network was engaged as a partner in the development of the strategy for affordable housing development. And I think there's lots of, these kinds of anchor networks that are really beneficial as you work to integrate any community wealth building strategy. You identify who are the networks, who are the anchor institutions that you can work with to ensure that you can develop a holistic approach to your community wealth building work. Another place for really great resources for folks that may not be as aware, but they've done a ton of resource development work on procurement strategies, trade agreements. You can see them all here on the screen. Really terrific work at Buy Social Canada, all free to access and download as you may need it. More expert than me, anyway. I'm not going to speak for Joe, so you can check those out as well.
Yeah, and having a local procurement strategy with with anchor institutions in your community, like universities, hospitals, municipalities, um, those are very doable procurement opportunities, and that helps build up the capacity of local businesses and cooperative businesses, in your community, so that you're building local capacity through social procurement,
And it's
and
kind of,
not and
yeah,
replacing
it's,
these extractive larger corporations, or
yeah.
working in balance with them.
Sorry, Joe. I kept trying to say my
Sorry.
apologies for speaking over you. I was just thinking the benefit of these kinds of approaches too is that they don't uh, cost a lot to set in motion. The thing is that, it's an arrangement of resources that's already present and active in the community. So as we struggle oftentimes to access financial capital, there's an amazing array of resources available to us that can be channeled differently to produce significant outcomes, regardless of raising a big fund or something like that. So,
Mhm.
yeah.
Yeah, so I thought we just highlight some other examples of community wealth building that might be a little bit on the fringe, but might trigger some creative capacity on your side as well. Um, so one example is sort of the adaptive reuse of properties. And we see a number of examples. This is the Mount in Peterborough, Ontario, that the Sisters of St. Joseph's there, as they were retiring and not needing and looking to repurpose their properties for in line with their mission, we're able to go through a process of transferring this property into a nonprofit, and developing a whole range of things within this one property. And we can see that maybe with schools that aren't in use anymore, definitely with faith-based organizations. Working with one here in Kingston, also Sisters of St. Joseph. They've just gifted a $20 million property that we're going to be readapting for affordable housing in our community. And so that's another really good example of using community wealth building, and cooperatives could have a role in that, and like a cooperative business development could have roles in this as well. What's in the next slide? So this is really different and thoughtful around community energy transformation. So SoloShare actually is a cooperative. It's an excellent cooperative and same with ZooShare biogas plant. Those two in particular are cooperatives, and you can buy a share. I have shares in SoloShare. And I get a return on my investment, 5% a year, and it's held as a bond, and it goes to locally owned renewable energy, solar energy. And then Zoo Shares is agricultural based biogas plant. And you can also buy a bond and become a shareholder and get a return as well. And then at the University of Victoria, they've got a really great center there. I think it's called Community Energy Transformation Center, maybe. But they're really looking at how you take old mines and create. Well, one example is old mines, new energy, and there's opportunities for geothermal energy and others, but there's all kinds of examples of community energy transformation projects that UVic has. And if you look that up, you'll see some incredibly diverse examples. And I'll just share one. Oh no, before, yeah, you can go to the next slide. We're going to end here, but I think one of the main messages I'd like to get across, um, and I think it's very akin to the Canadian cooperative sector, is that these financing mechanisms in community wealth building and community finance, they've been around for some time, and they really are emergent as well, and responsive to what the community is seeing as an opportunity for them. And I think cooperatives are the same way. The people come together and say, we think there's benefit in this, in something, and they create the mechanism in which to do that. And we can do that with finance, just as we can do it in other realms as a community members. It's finance doesn't always have to be far away from communities' capacity to use it, and we can develop the partnerships that can build things securely, that support communities to achieve their full potential in ways that they sometimes aren't able to achieve, and not leave people behind, not leave potential behind, which is what we see happening. In regards to community wealth building, Scotland has now adopted a strategic framework within their parliament, and so they have this new bill. Well, it came out last year, I think. Oh yeah, yep, it was. Sorry, I have to bring my
February
glasses even
2020.
closer, like staring at it. But yeah, so February 2026. So really quite new in terms of it coming into its full, acceptance. So this has been a really interesting process to learn how they've gone through this process to bring it through and what those principles are. I think they're very aligned to the cooperative sector, and there's a ton of stuff to learn within this bill and within their process that I think Canada could really benefit from. And at Catalyst, we would love to work more closely with the cooperative sector. Sorry, it's my dog. Um, to look at how we can strengthen access to capital for communities across the country. And so I think, there's a lot of ways in which we could even speak more deeply around, strategic approaches. But we wanted to just leave it there for you. Hope this was a huge, like, dump of information, and some of it may be familiar to you, some of it may be new, but really we're here just to spur that curiosity, give you some links and ideas, and for you to take from there. And for each of these things, we could go into at least an hour and a half or 2 hours of in-depth focused work, and study, but this gives you an overview of the landscape in Canada, very high level. Hopefully helpful.
Yeah, very high level. And so we'll leave it there. I just will say, in terms of the community wealth building work, there are demonstrations of community wealth building happening in different parts of the country. But there is now a dedicated team at Tamarack, the Tamarack Institute, that is looking that will be looking to build out a community of practice so that we can grow local demonstrations and share that knowledge out across the country to those communities that would like to learn more about the community wealth building approaches that work. Every context is different. As we know, we all live in different kinds of communities, but there are those principles that hold true the ones that we talked about in terms of the community wealth building. And then there's how did it apply in X context, and how did it work when you were looking at, when your anchor institution was the local library instead of the local hospital, or whatever it might be. Like, how did you make it work in your local context? And those kinds of learnings will continue to be developed and shared out through the Tamarack Institute over time and through us in partnership with them. So that's just a little plug to think, oh, there is a national organization working to build out that practice too.
Wow, this has been really amazing. And, seeing this new paradigm shift, really has been very impactful for me. I want to open the floor now for questions and for brief discussion. So if you have questions, feel free to put your hand up, put your question in the chat. We'll try to get to as many as we can. Joe has shared some really great resources in the chat. So we will send that out to you guys as well. But if you have any questions now, please feel free to raise your hand or drop it in the chat. I'd like to just acknowledge my colleague Kevin, who is also here manning the chat, and Joe has been responding to you guys as well. So, I want to wrap up promptly, so you guys can get on with your day. Um, I would like to share how impactful the Catalyst Community Investment Summit was for me. Just seeing the groups in action and the projects that they've done. You guys have shared some really, really great examples here today. And for our network, that's what they love. You guys love to hear about communities doing the work. So just in terms of co-ops, Joe, is there anything you can encourage? I know we have a few of our clients who are online now, who are in the beginning stages. Anything you want to share in terms of things that they can do that you would recommend as they continue their journey?
You're on mute there.
Sorry about that. Okay, great. Yeah, well, I think if you're interested in community finance in particular, I mean, I feel a little bit like the cooperative sector like is the community is like the grounding sector for community finance. So like we've done, if anything, we've learned from the cooperative sector in Canada. Like that is, it's been around for a very long time, and investment cooperatives have been around for a very long time. The principles that hold a cooperative together are ones that I think are shared. Um, and and so, there's a lot of roots in the cooperative sector. But if some of these other things that we've shared together today are of interest to you, uh, we have, and Geraldine, maybe you want to just talk about it, but we do have starting up again in September, monthly meetups online, and we'd also encourage you to sign up for Catalyst Community Finance. We don't send out a ton of newsletters, but we do send things out on occasion. Geraldine, do you want to just talk a little bit about, ways in which people might get involved with Community Catalyst at least?
Yeah, sure.
Mhm.
Sorry, I didn't. Yeah, I will add the link to on the website is the link to the sign up for the newsletter. And I do connect with everybody ahead of time to uh, about the meetups. At the meetups are a really great informal, kind of like it's not a community of practice, it's not that formal, but it is a chance for people to dig into some of the challenges and opportunities that they're having themselves, and to hear from peers about ways they might solve for those. We do have a number of profiles of community finance at work on our website as well in the resource section. And We have a LinkedIn group as well. It's less animated than the meetups. The meetups are definitely held on a monthly basis. Joe and I are taking a break over the summer. So we are taking a break from hosting those, but they will be kicking up again the second Tuesday. Oh, Tuesday again. The second Tuesday of every month at midday Eastern time.
Mhm.
So 10 a.m. for me here in Alberta. So if that's of interest, you can also just shoot me an email and I could add you to the calendar invitation that goes out every month as well, just to remind you that that's happening. I was going
Thank you,
to,
guys.
yeah, I was just going to give a nudge, not a nudge, a call out to Lana with Community Futures. I too have been working with Community Futures Central Capital Region on the community wealth building work that we're doing here in Drayton Valley, and they're awesome. Awesome.
Yeah, Lana and her team are doing some great work too. So, hi to everyone on the call who is just out there plowing away. We do have some questions I want you guys to just look at quickly. We have a question about timelines. Now, if you want to set up a co-op, feel free to reach out to us at Cooperatives First, Candice at Cooperatives First, or Kevin at Cooperatives First. We're going to drop our contact in the chat. But in terms of community bonds, Geraldine, if they want to get an idea of how long, what's a timeline to set up a community bond, what would you say?
Oh, I think, Joe, I know you have to run, but that is really in your wheelhouse.
I,
Well, I actually encourage people to go to one of the links I put in at Tapestry Community Capital. That is really where you're going to learn about the timeline of what it takes to put up a community bond. I worked at the Center for Social Innovation in Toronto for a long time, and we raised quite a lot of money, like around $6 million in community bonds, and the Ottawa Community Land Trust raises significant. They just raised about 3 million in community bonds, and it is a commitment to engage. So Tapestry can help organizations learn about it, set it up. The cooperatives for sure raise
yes.
money through community bonds all the time.
Yeah.
In fact, it started with Solar Share, which is
Mhm.
a cooperative. So, but I would say that the main thing, one of the main things is engagement. Like you have to engage your community, and you have to. So there's a lot of effort that
Mhm.
goes into raising a community bond
Right.
because there's a lot of engagement. Mhm.
Thanks so much, Joe. I know you have to hop
I
off,
do,
but
I
I
do. I have
do
to hop on
think,
my bike and get to my
thank
son's
you.
grade 8 graduation.
Congrats and thank you so
Okay,
much. But I
thank
think
you all.
that response can also go for Mike. Mike wanted to know legal costs and securities rules
Yeah.
and Tapestry and some of the other links would be good to check out, Mike. So thanks so much for that question as well. There are I would say, in terms of co-ops, there's another question. Community bonds. Okay, we also have a great webinar on community bonds that Kevin did as well. So if you guys too want to check out our webinars, we did a wonderful webinar with Propolis Housing Co-op,
Oh, yeah.
and they shared how they did it as well.
It took them 2 years to raise $1.2 million. So that's what, just to reinforce what Joe said, it takes a
Yes.
long time. Yeah.
Right. I mean, it's just amazing some of these stories. We know that we are right at the time now to wrap up. So I want to say thanks again to Geraldine and Joe. Geraldine, the information provided today, it was really heartfelt. And for, us workers here in the trenches, we appreciate the work that you do. And today's conversation provided practical ideas, inspiration. And for those of you working on co-op ideas, feel free to reach out to Cooperatives First. And before you go, we'd appreciate if you would take a few minutes to complete our post-session survey. We want your feedback. We want to keep on sharing great guests like Geraldine and Joe with you guys. And your support is invaluable to us. So, Geraldine, thank you for all you're doing. We'll continue to support your events. Please, you're now a friend of ours, so feel free. But thank you all for joining us today and have a wonderful day, everyone.
Thanks, Candace. Thanks, Kevin. Thanks, everyone.
Thank you all. Take care. Bye bye.